Hey there. My name is Veronica Assis, Client Relations Liaison at Blackstone International, an international advisory focused on diplomatic frameworks, global protocol systems, and cross-border institutional structures. The following analysis is academic in nature, intended for informational purposes only, and should not be construed as legal advice. Today's topic is: are diplomats exempt from income tax? The short answer is yes, generally in the receiving state for official diplomatic remuneration, but no, not for every kind of income. Article 34 of the Vienna Convention on Diplomatic Relations gives diplomatic agents broad host state tax exemption, but it explicitly preserves taxation for private income sourced in the receiving state. Taxes tied to private immovable property, estate and inheritance duties, indirect taxes built into prices, and charges for specific services. So the legally serious answer is not a blanket yes. It is a qualified yes. That qualification matters because the convention itself explains why diplomatic privileges exist. In the convention's preambular language, privileges and immunities are not meant to benefit individuals personally. They exist to ensure the efficient performance of diplomatic missions as representatives of states. In plain English, the tax rule is functional, not personal. The treaty rule before the myth. The first point is definitional. International law does not use the word diplomat casually. Under Article 1 of the Vienna Convention on Diplomatic Relations, a diplomatic agent is the head of mission or a member of the diplomatic staff. The same article distinguishes diplomatic staff, administrative and technical staff, and service staff. That means not everyone working at an embassy sits in the same legal tax category. Article 37 then shows how the regime expands and contracts. Family members forming part of a diplomatic agent's household may share Articles 29 to 36 if they are not nationals of the receiving state. Administrative and technical staff and their qualifying families receive most of the same privileges if they are not nationals of or permanently resident in the receiving state. Service staff and private servants get much narrower tax protection, mainly for the emoluments they receive by reason of their employment. Article 38 narrows things further. If the person is a national of or permanently resident in the receiving state, the full diplomatic tax privilege does not automatically apply. Unless the receiving state grants more, that person enjoys only immunity from jurisdiction and inviolability for official acts. In tax terms, local nationality or permanent residence can eliminate what people often assume is an automatic exemption. Timing also matters. Under Article 39, privileges and immunities attach when the entitled person enters the receiving state to take up post or, if already there, when the appointment is notified to the foreign ministry or other agreed ministry. That is why tax privilege depends on recognized status in the receiving state, not on assumption, social standing, or the mere possession of a diplomatic-looking title. What Article 34 actually exempts and what it does not. Now to the central legal text. Article 34 says that a diplomatic agent is exempt from all dues and taxes, personal or real, national, regional, or municipal, except for listed categories. The most important exception for this episode is paragraph D, dues and taxes on private income having its source in the receiving state. That single clause is why the phrase "diplomats do not pay income tax" is too broad to be correct. If the income is private and sourced in the host state, the treaty itself preserves the host state's taxing power. Article 34 also preserves indirect taxes normally incorporated in the price of goods or services, taxes on privately held immovable property in the receiving state, estate or inheritance duties in the specified circumstances, charges for specific services, and certain registration, court, mortgage, and stamp duties connected to immovable property. So the exemption is broad, but it is not absolute, and it was never drafted to erase every tax consequence of daily life. Article 42 adds another important limit. A diplomatic agent must not practice in the receiving state any professional or commercial activity for personal profit. That does not just regulate conduct. It also explains why the convention expects private local source earnings to remain exceptional rather than normal for accredited diplomats. That table shows a recurring pattern. The treaty baseline is broad exemption for official remuneration and certain non-host source income, but not for private income sourced locally. The United States just expresses the same idea through a more layered combination of treaty rules, tax treaties, and domestic tax law. It also shows why Article 34 excludes indirect taxes. Canada requires diplomats and missions to pay GST or HST on taxable domestic purchases and then recover it, where reciprocity exists through a refund or rebate program. The U.S. Office of Foreign Missions likewise administers separate reciprocity-based exemption cards for sales, use, hotel, airline, gas, utility, and related taxes. That is exactly the kind of separate domestic mechanism you would expect when a treaty distinguishes between direct income tax exemption and taxes embedded in transactions. Consular officers, honorary consuls, and the common confusion. A second common mistake is to treat diplomats, career consular officers, and honorary consuls as though they are taxed under one identical legal rule. They are not. Under Article 49 of the Vienna Convention on Consular Relations, consular officers and consular employees and qualifying family members are also broadly exempt from dues and taxes, but the convention preserves indirect taxes, taxes on private immovable property, estate and inheritance duties, charges for specific services, and, crucially, taxes on private income having its source in the receiving state. So career consular immunity from host state taxation is broad, but it follows the same basic logic of official status and source of income limits. Honorary consuls are narrower still. Article 66 says an honorary consular officer is exempt from dues and taxes only on the remuneration and emoluments received from the sending state in respect of the exercise of consular functions. That is a much smaller rule than the one for diplomatic agents or career consular officers. Article 58 also makes clear that family members of honorary consular officers do not receive the convention's privileges and immunities. Canada's current protocol guidance mirrors that narrow logic. It says honorary consular officers are exempt from dues and taxes on remuneration and emoluments received from the sending state in respect of consular functions, but do not enjoy the broader fiscal package given to diplomatic agents and career consular officers. So if someone asks whether diplomats are exempt from income tax, the first serious legal question is not just what the person is called. It is which treaty category actually applies: diplomatic agent, administrative and technical staff, service staff, career consular officer, honorary consul, family member, or locally engaged employee. International law answers the tax question differently depending on that category. The sending state question, the practical test, and the conclusion. A third common mistake is to assume that host state exemption also eliminates any home country or sending state tax obligation. The Vienna Convention does not do that. It is a receiving state privileges regime. Whether the sending state taxes its own citizens or officials is a matter of domestic law. The IRS, for example, says U.S. citizens working for a foreign government or international organization must report that compensation as wages on Form 1040. If the services are performed in the United States, that compensation is also subject to self-employment tax. If performed outside the United States, it still must be reported as wages even though self-employment tax does not apply to that foreign source compensation. That is why the practical legal test is simple and reliable. Ask 4 questions in order. What is the person's recognized treaty category? Has the receiving state recognized that status? Is the income official remuneration or private income? And if it is private income, where is its source? Once you separate category, accreditation, income type, and income source, the answer usually becomes clear. So, are diplomats exempt from income tax? The legally accurate answer is yes, generally in the host state for official diplomatic remuneration, but no, not as a blanket rule for every kind of income. Article 34 protects a diplomat from most host state direct taxation, but it expressly leaves room for host state tax on private local source income and other listed categories. Articles 37, 38, and 39 then show why status, family role, staff category, nationality, residence, and accreditation timing all matter. If you would like to explore diplomacy further and take a first step into understanding how international diplomatic systems function in practice, visit us at wblackstone.com.